Hey traders, Nick Shaheen here looking at answering a question actually that just came from a new member who asked, is this a good time to buy eBay calls? Well, let me give you the answer from the charts. I haven't looked at the eBay fundamentals in a while. I'm going to assume that they're doing well, just like every other online opportunity. So we'll look at that a little bit later. But from the charts, I do have an answer actually. It all depends on the time frame. Like, is this person thinking long term, swing trade, breakout, whatever? So from the chart itself, this is not an obvious point of entry. Like, there's nothing hurrying me to chase it. I would chase it on a breakout above 61.3, which is the past 3 or 4 failures. These are daily candles, so you want to say the last week they've tried to break out and they failed. If they actually achieve it soon, then they would invite the momentum traders. Those are the guys and gals that like to buy high and sell higher. If something is moving up, they'll wait until confirmation that they are going up, and then they chase it. They don't care how high it is. They just want to buy it high to scalp a rally. Note is that as soon as that happens, it's going to hit a cluster of resistance. So the same stall here could happen into 63.50. But if they can clear, I would say 64.2, 64.3, 64.5, or 65, any of these failures, they could just extend the rally. How big of a rally? It could be $7 estimate from the base, which would be the 61 and change. So this is the logic. The other part would say, okay, if it doesn't break out and for some reason it trips up and it fades closer to 58 or 57, that's an opportunity to buy the dip in order to catch that swing higher. Why is that? Because just like this was proven failure, there's proven supports for the same time frame. So it's basically ping-ponging inside of tight range. The breach of either side of that range is going to carry momentum in that direction. By the way, we do this all day in the chat room. So number one, subscribe to the channel is free, and hit the bell so you can get alerted. Number two, in the description, here comes a commercial, there is a link to the chat room, which is not free to be in, but it's free to try out. The transaction takes you to PayPal, but it's got $0. I just want to make sure that it's real people trying to look at what we have, because we do have almost 300 people in there, and it'd be unfair if I just let everybody in without knowing that they're real people. Okay, a lot of trolls out there. Back to this chart. So basically the range, ping pong inside the range, break out of the range, one side or the other, it will carry. So if the bears are able to break below 56 or 57, they could bring it down to 53, at which point will be another attempt. So let me put pictures to it. I just put these pictures from that question, which literally came at 12 minutes ago. These are the lines that I came up with. Resistance, chase it on a rip. So it's basically buy the rip or buy the dip with a tight stop. And if this fails, then I would attempt it again down here. This is the trader's mentality. If they get above that, it's open air. Forget it. The bears have nothing to shoot against. I shouldn't say the bears, the sellers, because bears and bulls buy and sell. So what about somebody jumping the gun? They could jump the gun. The earnings are coming. I don't know how it would react. The last reaction, the earnings was up. The one before it was down. The one before it was meh. The one before that was eh. So it's a coin flip because we don't know expectations, right? We know they're going to kill it like everybody else. We don't know what people are expecting, so we cannot guess up or down based on the quality of the report. Please get that in your minds and accept it. So what about the investment? So somebody can buy it now for the long term. They don't need to worry about it. They don't need to watch this video. They believe in it long term, so they buy it and hold it. Who cares if it goes down to $3? I care, but most people don't. Some people don't, I should say. So can I buy it now anticipating the breakout? I could, but the proper thing technically is to wait for the breakout and chase it, even at the risk of missing it out. But I would stop myself out if I bought it just for the breakout and it doesn't happen. That's number one. It could also be an early earnings trade. Chewy is reporting after hours. Why do I mention that? It's up 10%, almost 9%. I missed out. I had an order to buy calls and it didn't fill, and I didn't press the issue because I don't have an edge over the earnings. It's just a coin flip. So the reason I mentioned Chewy, it's a high flying stock. It's an online company, and if they have appetite to pop on earnings and maybe hold it, then maybe people will start anticipating the same behavior in the following ones. So in a few weeks, this guy's going to report. eBay. I don't know if I even mentioned what the company name is. Anyway, eBay. So now I drilled down shorter term to see if we can get some more intelligence. So now I have a couple more numbers for you. The same number on top, 61.2, 61.3. In fact, 61.3 would close a gap that's almost closed, like inches. But the new number is 59. I think I would see buyers into 59 and 58.8. So the odds of them breaking out from this are looking pretty good. It will need the whole market to cooperate, of course, over the next couple of days, and you know how choppy that's been. So we don't know what's going to happen. There's jobs coming out. It's a short week. It's the end of the quarter tomorrow. By the way, it is 3:30 today, March 30th. So the end of the quarter, all kinds of mystery stuff happens, like how the market closed today was a mystery. How it closed on Friday was a mystery. And anyway, so there are a lot of things that are going on that are unusual. Sentiment is bad, right? So we're circling around here. Did you know that the SPX set records already this week and last week? So Friday was the highest close ever in the SPX. That's the S&P index. Monday was pretty darn close. In fact, the high was an all-time high on Monday, if I'm not mistaken. I mean, you can see it. And today, as bad as things feel, and the scoreboard was negative, this is all-time high yesterday. This is today within like spitting distance. Look at the ascending channel. We just merely are back to the mean, and we are maintaining a nice ascending trend. On 3.5 we pierced it, but we didn't close that low. So yes, there's nervousness out there, but if you leave the headlines alone, the market wants to rise. So back to the question, can I buy calls? Yes. Do I buy calls? No, because I like to see the breakout. Can somebody buy calls without being on my crap list? Sure. As long as they're true to themselves and they have okay, if I'm wrong, I will get out at this much red. That's the only thing. And how do I execute a trade? Okay, so this is a practice platform from E-Trade. The platform itself is good structure-wise, like how you can do set up your trades for options. It's horrible charts, and it's got a ton of bugs. It used to be a lot better. So what are we looking at here? eBay. So buyer beware as using it. It's good for structure, you'll see. It's not reliable. How about that? So this is, I'll go to May. So it's not a lot of busy. So I don't know how well it's going to fill relative to the quotes. So in this case, current price is 60, which is right here. If I wanted to buy calls, May 65 call would be the furthest out I would buy. Let me put it on a chart for us. Yeah, that's even too far from me. I want to I don't want to guess how far it's going to run. I want to guess up, and that's it. I don't want to have to lose because I wasn't aggressive enough in my pricing. I was cheap. So based on this, it tells me that for the next 52 days, that's the May contract, expires the middle of May, the market makers expect about $6 move. So between 66 and 54. Anything outside those two is just too much hope. So 65 is within that range, but visually on the chart, it's not appealing to me. That's why it's only $1.50. So in this case, buying the 60 call for 330 is better for my taste with a tight stop. It will get better action if the price rises. It would just be easier to scalp. This one, the cheaper one, would be a bigger bang for the buck, but it's the odds of it working out are a lot lower. This one is a coin flip because it's right here. It's almost like buying shares. This one needs a rally to win. But there are 52 days, so it's doable. And maybe if I go in here, I can get one that's halfway. So the other one was 60 or 65. Here we have all kinds of other alternatives. So that's probably the better thing. So go to 1 week earlier, May 7th, we will get like the 61 call. So slightly above here, maybe 61.5 or $2.40. So what does that mean? If I buy one, it's going to cost me $240. And it doesn't have, it has 38 days versus, the other one would have 7 days longer. No, wait, they're missing one. Okay, so it's a couple of weeks shorter. That's why it's that much cheaper. So buying one would cost me $240. How can I profit? If price rises, this $240 will rise in value. You see how they get more expensive? That's how, because they're in the money, so to speak. Price has already gone past it. The price has risen. Here's price. These are all calls. These are puts. Price has risen, and these calls are in the money. So what does it mean when I buy a call? So if I do, I'm going to go back to the monthly. It's easier visual representation. So if I buy this at 60, it means I have locked my price in at 60, but I don't have to buy the shares right now. All I have to do is pay the $335 fee, and they reserve 100 shares for me at that price. So I really need it to go above 63.35 to break even, but I don't have to, because if it does rally, this value increases. Look, it's almost double at 55. So somebody that bought this for $3 when price was lower, now has doubled their money. The easy way to look at it. So they reserve their price to be long at 55, and they're locked in. So anytime they can say, you know what, I reserved that right, exercise me, give me those shares. So they put the shares at 55. So they immediately are green, but they paid whatever they paid to get into it. Same concept here. I don't own shares. I don't want to spend 100 times 60. Instead, I'll spend $330, and that locks me in for 100 at 60. So at any point in time, I can say, give me those shares at 60. The stock could be 80, and they'll give them to me at 60, and I only paid $335. So that's the concept of buying shares. But they're also good for trading. So I buy it with no intention of buying shares. I'm not forced to buy the shares. It's my prerogative. So because I'm buying the call. If I buy it and I'm right and the stock spikes, this 3 turns into 15 maybe if I'm lucky. That means it has to go to 85. And $300 turns into $1,500. So it gains pretty quickly, but it loses pretty quickly too. So keep that in mind. That's why I'm saying tight stop. That's why I'm saying I don't like to anticipate, because if I do this a lot, I end up with a whole bunch of calls, and one bad day I would go whoop, and the account disappears. So that's why they say options are dangerous, because they seem so easy, and then something happens, and then they're not so easy. But they are easy if you keep a level head and realistic expectations. All right, this video was way longer than I anticipated, because I went into this secondary options preview for somebody that doesn't know options. Nothing here is a recommendation, by the way. All these, I'm answering somebody's question. They were coming to me asking about buying a call. I shared my trigger for that, and then I shared what somebody would buy, how somebody would buy a call. It wasn't me saying it's time to buy a call in eBay. In fact, I said wait for the trigger and then chase it, or wait for the dip and then buy it.